Hey YouTube, this is Robinhood Investor. Hope you had a great week of trading. As always, I really appreciate your support. So if you like this video, give it a thumbs up. And if you want to learn about investing, subscribe to this channel. Today I'm going to talk about Mastercard stock, ticker symbol MA, currently priced at $297 per share. Make sure you stick to the end of the video for my opinion on this stock. Past year performance up 12%, past 5 years up 221%. So it's a very high growth stock. Market cap is $299 billion, P/E ratio is 40, and dividend yield is 0.47%. Taking a look at the Mastercard financial results for first quarter 2020. So you can see for first quarter results, net revenue, Q1 20 non-GAAP is $4 billion, and that's adjusted 3% year-over-year growth, and currency neutral 5% growth. So it's very steady growth year-over-year. Now taking a look at the adjusted operating expense at $1.79 billion. That's adjusted 7% year-over-year growth. Now operating income, you can see it's $2.2 billion for Q1 20. Currency neutral 2% growth, and adjusted it's flat. Now adjusted net income, you can see it's $1.8 billion, and that's year-over-year growth of 1%. EPS, $1.83, and that's 3% growth. Overall, adjusted effective tax rate is 14.9%. Now for first quarter gross dollar volume, GDV, this is in billion dollars. So worldwide, 8% growth. That's great to see that kind of growth for a company this size. United States is 6% growth, and rest of the world is 9% growth. So it's very solid growth for gross dollar volume. Now for first quarter switch transactions and cards, you can see it's switch transactions 13% growth from Q1 19 to Q1 20, so that's year-over-year growth. And cards, 5% growth. So it's great to see that kind of growth across the board. Now for the revenue, you could see domestic assessments, 5%. Cross-border volume fees down 4%. Transaction processing up 14%. Other revenues up 26%. Rebates and initiatives up 24%. And total net revenue 3%. Now adjusted operating expenses, you can see non-GAAP 9%, advertisement marketing down 20%, depreciation and amortization 23%, adjusted operating expenses 7%. Now in terms of their capital planning update, the priorities were unchanged. So they plan to maintain their strong balance sheet, preserve strong balance sheet liquidity and credit ratings, long-term business growth, so invest in a strategic organic and inorganic opportunities, return excess capital to shareholders, so buying back shares, possibly increasing their dividend, and then capital structure, migrate to a more normalized mix of debt and equity over time. And this is a business update through April 21st. Takeaway is that their overall switch volume increase, switch transactions increase, and cross-border volume decreased. So a lot of their transactions were domestic. Cross-border volume trends, you can see across the board. Let's see, green is card not present versus, let's look at the gray one since that's total. So the gray line, you can see it's decreased from January to March, but it kind of bounced back up in April. So that's the cross-border volume trend. Now taking a look at Mastercard financials, you can see that revenue year-over-year from 2016 to 2019, very steady growth. Same with the earnings, the blue bar. So it's great to see. Quarterly, you can see that Q1 20, it dipped slightly, but that's probably due to recent circumstances. Now taking a look at the key stats, you can see that market cap $299 billion, trailing PE, which is in the past 12 months, 38. Forward PE slightly better at 34. Scrolling down a bit, you can see their 52-week change of 14.89%. 200-day moving average at $289 per share. Now in terms of held by insiders, it's 11.3%. Held by institutions, very high at 78%. So a lot of institutions hold this stock. Their dividend yield is, trailing annual dividend yield is 0.5%. Forward annual dividend yield is slightly higher at 0.55%, so it's great to see that increase in dividend. Payout ratio is very low at 17.77%, so we want the payout ratio to be under 50% so that we know that the dividend is sustainable. Now for their profitability, it's very high at 46.75%. For profit margin, operating margin in the trailing 12 months is 57%. Their management effectiveness is very effective. Return on assets is 22%. Return on equity is 147%. Their income statement is also very solid. So revenue in the trailing 12 months, $17 billion. Revenues per share in the trailing 12 months, 16.81. For the quarter revenue growth year over year, 3.1%. So even though it's not drastic growth, it's steadily increasing even during these times. Gross profit is $16.8 billion. EBITDA is $10.22 billion. So that's earnings before interest, tax, depreciation, and amortization. And the quarterly earnings growth year over year is down 9.1%. And so even though, so like Q1 2020, their earnings and revenue slightly decreased relative to the previous quarter, but year over year, it increased slightly. Balance sheet is $10.68 billion for total cash, which is great to see that amount of cash during these times to sustain their business. You can see their total debt is 12.47. Debt to equity is 226, which is for every dollar equity they have $226 in debt. Operating cash flow is $8.73 billion, and levered free cash flow is $6.85 billion. Overall, I think Mastercard is a solid growth stock. You can see they're very solid financials, and they continue to have steady growth even during these times. At such a company this size, they also pay out a dividend yield, and they're also increasing that dividend yield. So I think Mastercard is a great, solid, long-term growth stock to hold, and I may increase or start a position in Mastercard. That's all for this video. What are your thoughts on Mastercard? Comment down below. Remember to use my referral links below. Both of us get $20 for using personal capital or free stock for using Robinhood. If you like this video, give it a thumbs up. And if you want to learn about investing, subscribe to this channel. See you in the next video.